All right, this is section 4 of 5. We only got one more after this. And I was a little late on this one, unfortunately, because of Thanksgiving, but here it is. So the topics I'm covering in section 4 are bank rules, bank feeds, reoccurring transactions, the bank reconciliation process, and reports. So the bank feed functionality in QBO is one of its most dynamic features. The bank feed links to connected online bank and credit card accounts to provide a direct feed that automatically imports transactions directly into the banking center, saving clients time. Once the transactions are imported into the banking center, your client can review transactions in the For Review area so they stay in control of what ultimately gets entered into their QBO. The review allows them to match and accept transactions with what has already been recorded in QBO, and then categorize and accept transactions and enter a transaction that hasn't been recorded in QBO. In addition, QBO has a smart learning system that uses earlier bank feed activity to recognize and suggest matched transactions. The more the client uses the bank feed, the more accurate the suggestions become, so the client can easily accept or amend matches. The suggested matches appear in the Recognized section of the All Transaction dropdown in the Banking Center. So you'd go to the Banking Center and you would select Connect Account, otherwise you would link the account, and then you would select Bank, and then you would sign in to the online bank and complete the authorization. Then you would select the accounts to connect with the bank feed. You use the drop-down to select the bank account from the chart of accounts that corresponds to the accounts listed by the bank. If there isn't a QBO account that matches the bank account, select plus Add New from the drop-down and add more details about the account. Use the Date Range drop-down to choose how far back to pull the transactions from the bank account, then select Connect. QBO then connects the selected bank or credit card account and downloads all the transactions for the specified period. Then you would use the last screen to review the categories or set a reminder for later. In the training section, they step you through all the features in the banking tab. Make sure to go to the training section. Accept matches in the bank feed. Go to Banking tab, select the For Review tab to see the transactions that have not been categorized yet. To accept matches that QBO has identified, you would select Match in the Action column. Then select the Categorize tab to see that it's been matched. Note there's an option here to unmatch the transaction if necessary. To see details of a specified payment, select the link under the Added or Matched column. To review more transactions, return to the For Review tab. When QuickBooks Online finds multiple potential matches for an entry, it flags them up. Select View from the Action column. Review the suggested matches, include the date, the amount, and the description, and choose the right matching record, and then select Match. It's also possible to accept transaction in batches. To do this, you would select all the transactions in the drop-down, and then select Recognize to filter the transactions that have been matched. Check the boxes next to the transaction to accept, and then accept. Note that clients can also update or exclude transaction in batches. All these transactions will now appear in the Categorize tab. Manually adding transactions. You would navigate to the For Review tab in the Banking Center. To manually add a transaction that has no match, just select Add from the Action column or select the transaction line to see more details about it. Note that by selecting the transaction line, you can choose to categorize, find a match, or record as transfer or as a credit card payment. To categorize it, leave the Categorize option selected. Assign the right vendor or customer, then choose the right category from the chart of accounts. Then when done, select Add. Excluding a transaction. That involves removing it from the bank feed and not recording it into your client's QBO register. The bank, for example, might import the same transaction more than once, creating duplicates in the bank feed. Similarly, completing the reconciliation before clearing the bank feed leads to duplicates because the banking center doesn't match imported transactions against reconciled transactions. Excluding is about avoiding errors. Because the goal of reconciling is to prove that the transaction in the register matches the transactions that have been cleared on the bank statement, a duplicate transaction prevents the register from reconciling with the bank statement. This leads to incorrect financial reports. To exclude a transaction, you would select banking in the left-hand navigation, then you would select the box next to the transaction to exclude, then you would select exclude in the dark banner that pops up. The transaction has now been removed from the For Review tab in the bank feed. Select the Excluded tab to see those transactions. From here, you can manage them further if necessary. If you need to reinstate one of those, you would go to the Banking tab, in the Banking on the navigation. You would go to your Excluded tab, and then check the box next to the transaction to reinstate, and then select Undo from the dark banner that pops up. The transaction is now back into the For Review tab on the bank feed for your client to add, categorize, or match and accept. So here's a picture of that. So here you are in the navigation, the banking, right? And then over here, you see this is the banner that we were saying. So you have your three sections. You have For Review, Categorized, and Excluded. And then when you click, this dark banner comes on and gives you different options. Creating bank rules. So this saves times with automation. Many clients find that around 80% of their transactions are repeated month after month. So checking, adding, and categorizing these regular transactions are really a chore. So QBO allows clients to set bank rules to speed up the matching process. Rules can identify repetitive bank feeds and automatically suggest a match. Clients can set up rules to tell QBO what to do with downloaded banking activities that meet a particular set of conditions. Rules give clients control and can take some of the pain out of working with regular and predictable bank feed activities. Bank rules automate the categorization of transactions in the bank feed, including assigning the transaction type, category, payee, and if the client uses these categorization methods, also class, tag, and location. Rules can be prioritized, copied, edited, deleted, and exported. Clients can even create bank rules to add transactions to the registers automatically. They can also be used to automatically split transactions, which means assigning different categories to multiple lines of a transaction. I can say this, if you're new at this or if you're a client that's new at it, I would not set up for automatically having a transaction go through. Instead, make sure they're manually doing it in the beginning and then later, once they've mastered it a little, then set that up. All right, rules have two elements, conditions and actions. So conditions define what transactions to look for in the bank feed and can include criteria, such as specific bank account, keyword in the description, or transaction amount. And then actions tell QBO what to do with transactions that meet the rules conditions. Examples would be instructions like posting a transaction to the correct account and or assigning pre-specified data such as a payee, category, class, location, or tax. Rules apply to unaccepted transactions only. So let me say that again because I'm pretty sure that's a question on the test. Rules apply to unaccepted transactions only. So transactions that are in the For Review tab in the banking suite. Clients will likely know which of their regular transactions they categorize the same way each time. It could be regular money in or money out payments to and from the same vendor or customer or purchases from QBO. If the client isn't sure, a good tip is to check the categorization history of a transaction. This shows how previous transactions from this vendor or customer were categorized in QBO. If transactions have previously been categorized in a consistent way, the client might want to create a rule so that QBO will now do it automatically. To check a transaction's categorization history, go to the For Review tab in the Banking Center, select the transaction in question, and then select Categorization History at the bottom of the panel. In this example from the training section, you can see that transactions from this vendor have been previously categorized as office expenses. So they did exactly what we just said. They went into the categorization history and they were able to see from this particular Lenovo, it's always been office expenses. So this client could choose to set up a rule to categorize future transactions from this vendor in that same way. That last example showed that clients can create a bank rule. So this was in training. That last example showed that you can create a bank rule from that categorization history panel in the banking center. However, the usual steps to creating a bank rule is going to the banking tab and then selecting rules tab and then new rule. And then when you select that new rule, that's where this pop-up window comes up. The training section addresses the following rule conditions. So you would click on each one of them and they'll define that for you. So you're going to want to go to the training section so you can look at these specific topics that they cover on bank rules. Once clients have specified which transactions that meet the specified conditions, they can also specify whether the rules should assign or exclude transactions to or from these actions. To exclude, an example would be a client with a bank or credit card account that mistakenly downloads pending transactions that either don't affect the balance or will be removed in a short time. So if you assign, you must, because we're not talking about excluding, if you assign, you must choose a transaction type. The options here depend on whether the rule applies to money out or money in. If the rule applies to money out transactions, the options would be expense, transfer, check, or credit card payment. If the rule is going to apply to a money in transaction, the options would be deposit, credit card payment, or transfer. The second thing is category. Here clients select the amount on the chart of accounts to categorize this transaction to. I'm sorry, the account. I'm sorry, here's where a client selects the account on the chart of accounts to categorize this transaction to. If there's more than one account, then you can select add a split to split by percentage or by amount. Number 3, a payee. That's optional but recommended. Again, the options here depend on whether the rule applies to money out or money in transactions. For money out transactions, you would use the payee drop-down to select a vendor. Clients can also select a customer here to record a project-related expense, for example. If the rule applies to a money transaction, then the payee drop-down would specify a customer. Then tags are also an option. Clients can also categorize matching transactions by any of the following advanced categorization methods if they're using them: tags, classes, and locations. In addition, clients can create a memo that will also be added to matching transactions. To do this, they would select plus sign, assign more. And also noted here that the training section also covers using the auto add feature and the rules list. And the rules list is, in order, like in order of priority. All your rules are listed and then you put it in order of priority. So rules are applied in numerical order as listed in the rules list. The first rule that fits a bank activity, that is where the transaction meets those rules condition, is the one that QuickBooks Online applies, and the rules are listed in prioritized order. To change the order in which rules are applied, you'd use the grip icon and drag it up and down. A transaction will be flagged for review if it meets a bank rule condition. You or the client can then decide whether to tell QBO to execute the rule actions. If QuickBooks Online runs a transaction through each rule and still does not know how to categorize a transaction, it'll try to give a category based on past transactions or the customer vendor name. These transactions will be labeled as uncategorized income or uncategorized expense or uncategorized asset as appropriate. Remember those default accounts we talked about. Clients can use reoccurring transactions to enter routine expenses like monthly cell phone bills or utility bills. However, it's usually better to use bank rules because they take into account variation in dollar amounts and dates. And this is easier than fixed amounts and dates on scheduled reoccurring transactions or checking for and editing reminder transactions. If your client used both reoccurring transaction and bank rule for the same transaction, you or they will have to check for and delete duplicate results from using both of them. We're going to look at reoccurring transactions next. Let's look at the questions that are associated with either bank feed or bank rule. When an excluded transaction is reinstated, which tab in the banking center will it appear under? The answer before review. From the For Review tab in the Banking Center, how can you exclude a banking transaction that is a duplicate? You would find the transaction, you would select the checkbox next to that transaction, and then when the banner pops up, that dark banner, you would select Exclude. Which three criteria can be specified in a bank rule condition? The transaction amount, the description, and the bank text. What statements about bank rules are true? I just put them all there. So there might have different questions, and the questions might include one or two or several of them. So just have them all in your notes. So what statements are true? Bank rules can be prioritized. Bank rules apply to unaccepted transactions only. Bank rules can automatically be split. Bank rules can be copied, edited, or deleted. Bank rules can automatically add transactions to a register. Bank rules can have up to 5 conditions, and bank rules can only have one rule applied per transaction. So you want to have all of those in your notes. You don't know how the question will be phrased, but if you have all of them, you shouldn't go wrong. What happens when QuickBooks Online doesn't find a rule that applies to a transaction? Well, then it would suggest a category based on a past transaction with that same vendor name. What 3 transaction types can you assign for a money in transaction? You can either do deposit, credit card payment, or transfer. What 3 transaction types can you assign for money out? Expenses, well, it says 3 well, there's 4. I have all 4 listed there. So if you have all 4, again, you can't go wrong. Obviously, in the answer, if they're asking for 3, 1 is missing. So have all 4 in your notes, and you can't go wrong. So expense, transfer, check, or credit card payment. Those are all 4. So have them all in your notes. Again, here, I put 3. Maybe it says 2. What if it says what 2 transactions? You have all 3 in your notes. Reoccurring transaction. So the reoccurring transaction feature in QuickBooks Online is a great way for clients to automatically record payments and receipts that occur on a regular interval in fixed amounts. Recurring transaction in QuickBooks Online can be set to manage pretty much any transaction in any workflow, like sales receipt, invoice, bills, journal entries, checks, deposits, expenses. A recurring transaction can be set up to occur on a scheduled or unscheduled basis, or as just a reminder for you or the client. Once a client has set up the parameters for the recurring transaction, QBO will automate the process. Clients can also use an existing recurring transaction as a template for creating others of a similar nature. So I have a list here of the transaction types that can be set as recurring. So you want to put all of these in your notes. This is the ones that can be set as recurring transactions. And then there's a little note down here, as an accountant user, so if you have a QBOA account, you can also set up recurring journal entries. So for example, maybe to reclassify deferred revenue or prepaid expenses. So these are the ones that you can. Transaction types that you cannot set up. So the ones you cannot: bill payments, customer payments, time activities, pay down credit card type transactions, and inventory adjustments. So no, you can do invoice, as you saw from the slide before, but you can't do customer payments. So some of the benefits of using recurring transactions are that clients can use them to automate money out transactions that are paid at regular intervals and for fixed amounts, automatically invoice customers for regular services provided at fixed prices, set up invoices to include unbilled charges and automatically send emails, record non-posting transactions such as purchase orders or estimates, or use recurring sales receipt with QuickBooks payments. Note, clients should review their recurring transactions to ensure they avoid sending out automated invoices for, let's say, canceled or delayed work. Also note that a customer, vendor, employee, product, service, or account cannot be deleted if it's currently being used in a recurring transaction. There are 3 template types that you can use for this particular feature, and that would be scheduled, unscheduled, and reminder. Setting up the recurring transaction. You could either go from the gear icon to recurring transaction, select new, and then you would select the transaction type, and then whichever ones. After you select it, you click OK. And then in the template name, you would put an easy identifiable name that you would want to name that recurring transaction. And then type, you would select either scheduled, reminder, or unscheduled. And then the start date and the end date. Add any details that you might want to the category detail section, and then finally save template. Another way to do it is when you're in any of those that I listed that are possible, on the very bottom, there'll be an option to select. It'll say make recurring. So you select that make recurring, and then that pop-up window will come up for you to fill out the desired information. So here's some of the questions you might see here. What are 2 ways to set up recurring transactions? Well, that's what I just went over in the last one. Gear icon and recurring transaction, or select the make recurring option at the bottom of the desired transaction. Which transaction types can be made into? Well, remember, I had that whole chart there for you. So you have bills, expenses, invoice. You'll have to have that in your notes because I don't know what kind of questions. There might be several of them out there. If you have them all in your notes, again, what do I say? You can't go wrong. Next one is, what type of scenario would a recurring transaction be the best automated option? For sales receipt sent monthly to a customer for fixed amount and descriptions. So sales receipt is great if it's a fixed amount and sent monthly. What are the benefits? I just listed all of them. Again, I don't know what the question might be if there's several of them out there. Just have them all and then make sure, if you have enough notes on this, you can't go wrong with the questions. Bank reconciliation. The Reconcile tool makes it easy to reconcile accounts and find discrepancies between the register and the bank statement. It's best practice to reconcile accounts monthly to ensure that what clients have in QuickBooks Online reflects the actual income, expenses, and other movements and adjustments of cash. When you're done reconciling, the difference between the amount in QuickBooks Online account and your bank statement should be 0. Now, we did that in that class, but I told you the way we do it in that, that 10 chapter class isn't realistic, but I still went over the procedures that you need to do in the reconciliation process. So if you're not familiar with this, you want to go to that class I posted about 7-8 months ago and get a little bit more acclimated with the process of reconciliation. Before starting the reconciliation process for a client's account, you need to have the beginning and ending balances and the total amount of withdrawals and deposits on that account. It's best practice to connect your client's bank account to the banking center. So as we said, setting up that bank feed, and then it makes it easier for you if you have that bank feed set up to do the reconciliation. But you don't have to. You don't have to have your bank feed set up for the reconciliation. Matter of fact, in the example I have with the book I use, they don't have it. And so we're doing it manually. Because their account statements are automatically uploaded to QBO without having to work with paper statements or sign into a bank account. If the bank account is connected to the bank center, you can easily access the beginning and ending balances as well. So to do that, you select Reconcile from the gear icon in the Account Tools, or from the Account Tools. And then from the Account drop-down, you would select whatever account you want to reconcile, and then you would select View Statements. Then select the statement you want to use for your reconciliation. Note that you also see a list of statements that have already been reconciled. Make a note of the beginning and ending balance of your unreconciled statement, and then select Done. And now you'll be ready to reconcile. So once you have your balance amounts, you'd be ready to start reconciling. So to reconcile, you can select Reconcile from either the gear icon or from Accountant Tools. From the Account drop-down, select the account to reconcile. From the client's bank statement, enter the ending balance and the ending date, and then select Start Reconciling. On the next screen, compare the list of transactions on the bank statement with the transactions that you have in your QBO account. You want to put a check mark next to any transactions that appear on the bank statement that haven't been marked cleared yet. And you see I have this little note here. Note that there are already going to be check marks next to any transactions. If you have that bank feed set up already, any transactions that you already had marked cleared with your bank feed coming in, those automatically will be checked for you. Once the transactions are verified, the amount at the top right will go to 0. And once you see that 0, that's when you're going to push Finish Now. Select that Finish Now and then Done. If you want to look at any previous reconciliation reports, you go after you're done, you'll see this link come up, History by Account. It's a little blue link. You click on it and you'll be able to see your reconciliation reports. Discrepancies can occur during the reconciliation process. If QBO detects that the beginning balance could be inaccurate, it displays an alert on the reconciliation screen. You will need to find it, fix it, and then you can continue. So if the balance is incorrect, the cause is likely one of the following. So they gave us different reasons of why. It could be changes that could be made to one or more transactions that were marked as reconciled. So the transaction could have been deleted, the transaction amount was changed, or the transaction was manually unreconciled in the register by changing it from R, which is reconciled, to C, which is cleared or no status. Oftentimes with students, I always say be very careful when you're backtracking from the month before and making any changes, because if it was reconciled, you're going to mess that up and you'll see it. You'll see the screen. I have it on the next screen forward where it says, oh, something's not right. The other two are one or more transactions have been manually marked as reconciled by changing their cleared status to R in the register, or then the other one is maybe QBO itself included transactions in its calculations that it shouldn't have. So this is what it looks like. Oh, it's taking a second to come up. So this is what it looks like when it comes up. It says your account isn't ready to reconcile yet. But then there's this little blue link here and it says, we can help you fix it. So if you click on that link, that will bring you to the reconciliation discrepancy report. So that'll only come up if you have a discrepancy. So if a discrepancy is detected, it immediately will send you this link. You click on it and it will give you suggestions on what you can do. That's in the training section if you like to look at that a little further. Once you've fixed any issues that were flagged on the reconciliation discrepancy report, the reconciliation opening balance will match the previous closing balance, and QBO will then no longer display alert, and you can start reconciling the account and proceed with the reconciliation. Although the best way of fixing reconciliation errors is to use the reconciliation discrepancy report, an accountant user can also just go ahead and undo the reconciliation if necessary. Now, just note what I just said, only accountant users. So accountant users are the only ones that can delete a reconciliation. So if you're a business owner and you have a QBO account, you wouldn't have that right to delete a reconciliation. Instead, you have to go about it by the reconciliation discrepancy report. You can undo a reconciliation if you're an accountant user. If that reconciliation was forced, which means it wasn't saved, it was force saved without that zero. And when I do my classes with my students, I always tell them, if it doesn't say zero, do not click finish now. We have to figure things out before we put through the reconciliation. So undoing the reconciliation allows you to start over so that you can find the discrepancy. To undo, so if you are an accountant user, to undo the reconciliation, you would go to that history by account screen. And then under the action column, again, you would only see that if you're an accountant user, you would go to the drop-down menu and you would select undo, and you'd undo that reconciliation and redo it. So here's some questions you might see in this area. What is the default filter that is automatically applied when reconciling an account in the reconciliation dashboard? It's statement ending date. The ending date is what is the default feature there. What statements are correct regarding reconciling a bank statement in QBO? To view the reconciliation report, you would select history by account. Transactions added or matched in the bank statement center are automatically marked tentatively. I don't know if I'm saying that right. Cleared. And to begin the reconciliation process, you need to enter the statement ending date and the ending balance from the relevant bank statement. What three conditions could lead to the beginning balance of a bank or credit card reconciliation being inaccurate? So that was those three that I had there in the bullet points in the previous slide. A reconciled transaction was deleted, or a reconciled transaction amount was changed, or a reconciled transaction status was changed to not reconciled. Which statement is true about the reconciliation discrepancy report? It's only available if the reconciling account has some sort of discrepancy. Once you fix that discrepancy, then they'll no longer need a reconciliation discrepancy report. The last section we go over in section 4 is reports. So in the training section, Intuit provides an overview of Reports Center where they highlight each section and explain each feature of those sections. Then they go into the differences of cash and accrual basis accounting and its effect on reports. That's kind of accounting 101, so I'm not going to go over that. But if you're not familiar with either one of these, make sure you get into the training section and go over those and more in depth. Without financial reports, it's difficult to understand how well a company is performing from a financial standpoint. Not only are such reports crucial for your client to be able to understand their financial stability, but they're required by law for tax and standard accounting practices. The variety of report options in QuickBooks Online provides your clients with objective and real-time data on how their business is performing, including key information about customers, vendors, and employees, a snapshot of the company's assets, liabilities, and equity at any single point of time, how much the company earned or lost over a specified period of time. The valuable insights that clients gain from reports allow them to keep accurate records to comply with mandatory accounting regulations, access the financial health of the company to make business decisions, identify trends and roadblocks to make strategic decisions when necessary, and ensuring that they pay the right amount of taxes and mitigate any errors. I always stress to my accounting and my finance students that are interested in that when we're dealing with accounting, finance, managerial accounting, and so on, it is really important to understand what you get out of your reports, how they help you in making decision making, how they help you in being able to understand the financial stability of the your company, as well as not just reports, but financial ratios. So they kind of go hand in hand. You need the reports to be able to calculate and formulate your financial ratio. So they go hand in hand. So in this section, they talk about reports. I know in my class, I focus a lot also on ratios. We don't go over that, and they don't go over that in QBO. But just take into consideration when we talk about comparative analysis and financial analysis, those are the two main things you look at: reporting and ratios. So transaction reports make up the greatest proportion of the reports in QBO. They provide transaction data in various formats to help clients find important information about their business. Example of transaction reports would be profit and loss, balance sheet, and general ledger. So the profit and loss shows you your financial performance of the business, and the balance sheet is that snapshot, the fundamental accounting equation: assets equals liability plus owner equity. So it gives you your financial position. These two right here are the most fundamental and important reports of any business, and they focus a lot on these two reports in the training section. Then you have list reports. It provides clients with information on the various lists available in QBO. Examples would be your account list, that's your chart of accounts or your ledger. You have the product and services list, that's a list of all the items the client sells or buys and the services they provide. The customer contact list, that would be the list of all their customers and any of their contact details that have been inputted. And vendor contact lists, again, list of vendors and their contact details. Then you have summary reports. That gives clients an easy view of their customers' sales, expenses, and more. Examples of summary reports would be accounts receivable aging summary and accounts payable aging summary. And then you have detailed reports. That's any summary report details. So it gives you individual transactions to provide a second layer of detailed information about customers, vendors, expenses, and more. And so just like we had the AR aging summary, you could have the AR aging detail. Just like we had the AP aging summary, you can have the AP aging detail. So reports, you could select reports from the left-hand navigation, and then there's that search bar on the top right. That's where you start typing in what report you're looking for. Then you want to make sure that the report period is correct. So if you're looking for that month, make sure you select the first to the end. Make sure that you have the right accounting method. That's what we talked about in the beginning. Are you using cash or accrual basis? If you're not familiar, I told you make sure you go to the training section and look at that up. And then you want to refresh the data on the report. And then you would select Run Report. When done, you would select the print icon to either print, email it, or save it as PDF. In this case that they have in the training, they said they would want to do save as PDF. If you take one of my classes, I always use save as PDF. And I always encourage clients to save as PDF because PDF is universal. Almost any and everybody can have and use PDF. If you choose Excel, you don't know if the person that you're sending the file to has Excel downloaded on their computer, so they might not be able to open it, or they might be using their phone or tablet, and a tablet can open up a PDF, but it can't necessarily open up an Excel. So I always encourage everyone, safest route, save as PDF. So let's a closer look. Like I told you, in the training section, they focus a lot on the profit and loss and balance sheet. So the profit and loss report summarizes the financial activity associated with the income and expense accounts for a specific period of time. It will indicate whether your client is operating at a profit or a loss. Then the balance sheet summarizes the financial position of a business at any specific moment in time. It reflects whether the assets of the business owned are enough to offset the liabilities and leave a net equity balance after the liabilities have been paid off. Most summary reports have corresponding detail reports. So for example, for the profit and loss has profit and loss detail, and then the balance sheet has balance sheet detail. The training section dedicates a whole large section to these two reports. So I would say if you're not familiar with them, make sure you look at that. Reports, more summary reports. So here's a list of that they have in the training section of other summary reports and their descriptions. So if you want to take a quick snapshot or freeze this for a second and put this down in your notes. Then you have detailed reports. So they have kind of a short little description here of what the difference are between summary reports and detail reports, and then they give you a few examples of detail reports. Then there's special reports. So they include special reports such as the business snapshot and the audit log. So the business snapshot is a graphical representation of the business money in and money out transactions. You run this report from the report center. The business snapshot is helpful for clients who absorb information better from a graphic as opposed to list and table. So these are our visual learners. However, it's more of a dashboard than it is a report. So clients can customize it and make it and save it, any customization, into that customized report or custom report. This report is of limited use in printed form because it's meant to be interactive. Clients can only drill down and find anomalies contributing to totals while viewing it on a screen. This is something that we saw from the desktop that was brought over here recently, I want to say in the last 4 years in QBO, and I enjoy it. It's on the dashboard and the business overview section. I think this is great. It's something I show to my students. I think in chapter 1 we look at that. Then you have the audit log. Audit log contains a list of anything that goes on in the business. So any changes, whoever signs in, signs out, and every single thing they do. So the audit log is a great way for a business that's run by several different partners that maybe not are there on a daily basis. They want to just log in and see what's going on. So you would get that by going to the gear icon and then selecting audit log. So again, that would include any transactions entered, reconciliations made, recurring transactions that were created, anyone who signed in or signed out, and it'll tell you by username. All right, quick reports. Quick reports display all activities for an account along with the running balance for the period. You and your clients can run a quick report from the relevant account and chart of accounts. So you can go to each individual account and then go to run report, and that's a quick report. Or you go to the product and service list, and then in the action column, select run report, and it would do that for each individual product or service. There are also reports that you can run from relevant centers, like, for example, sales tax reports that you can get from the sales tax center. So clients can also run specific reports from the cash flow center. There's an option to run open invoices, invoice lists, and sales and customer details. So you see here is the cash flow center, and then they have over here the different reports. Another example would be going to taxes. That's the one I said earlier. You can go to the taxes, and then when you're in the sales tax here, you have the reports, and then it was the 3 that I had listed in the last slide. Using reports to answer common client questions. I put a few here, but there's several in the training section. So I don't know if you want to take these in your notes or if you want to go to the training section and put them. I know of 2 questions that and I put those questions here. I believe they're how much is my inventory worth, or what is my quantity on hand? And that would be inventory valuation summary or inventory valuation detail. And the other one, I believe, was what are my, this question's been on for a while. What are my top or worst selling? So my worst selling product, you would go to sales by product service summary or sales by product service detail. But again, there's more questions. I just put a few up here if you want to jot them down in your notes. Customizing. The training section also takes you through an interactive tutorial of the customizing report from the header section, and then also looking at the features in the customize button pop-up. So this is something I also discussed in my class. So on the very top of every report, you have a header section where you're able to select certain features. But if you click on the one customize button, it actually has a little pop-up window that comes over to the right, and then that's where you would see several different sections. The first one being general, and under general, it has like, what is your accounting method, what is the period, and then let me scroll down a little here, and it'll say number format, and then also negative numbers, and then there's this little box here that you can select show in red. So if you wanted your negative numbers to show in red, this is where you would go. You would get, again, you would select the customize button, and that would be in the general section. So they have a little interactive tutorial in this when they go over customizing. So I encourage you, if you're not familiar with that, to do that. And they have it where you like click on the different buttons and it breaks down what each one does, the features. To start creating a management report, so this is the last one I think we go over, is management reports. You would select management report tab. That's in the report center. On the left hand side, the navigation, you select report. You go to the management report. The first step to creating a management report is choosing a template, because you can't create it from scratch. So what you have to do is copy an existing template. And here are the templates that they have for you to choose from. So clients, customers, companies, business owners will see company overview, sales performance, and expense performance. But if you're an accountant, a QBOA user, you see basic company financials and expanded company financials. So here are some questions, and this is the last section that you might see here. Which 3 predefined management report templates would a client see? So this would be a client, meaning a business owner. I just listed them: company overview, sales performance, and expense performance. What are the 2 aging options that are available in the aging reports? Again, there's a huge, I think there's like 5 different sections in the training that go over reports. You got to go through all of them, but for aging, it's current and report date. Which reports indicate when QuickBooks Online users sign in and out? That's that audit log. I always told all my clients about it. I think it's a great feature. You can see everything that goes on here recently. Another one is, the magnifying glass, and see recent transactions. Which feature in QuickBooks Online reports allows you to customize section titles on certain reports? So the titles would be edit titles. And again, that was that tutorial, that interactive tutorial I told you about. So if you're not familiar with those sections, look at it, because I don't know what other questions are out there. But yeah, you want to go through that and have that in your notes so you can look at the different features that they have here. Which report would you use to show the least popular product? That was the one I showed you from the questions and answers. Sales by product, service, summary, or detail. Which report summarizes the amount of financial activity associated with income and expenses? Well, that's our profit and loss, right? It's revenue minus expenses gives you your net income or net loss. Which report displays the business? So this is that graphical. So in picture form, that's business snapshot. If you want to display negative numbers in red on your profit and loss, where would you go? You would go to customize, and in the general section, that's where you see that little checkbox. What's used to validate the bank and credit card account balances on the balance sheet? I told you there's a whole section on profit and loss and balance sheet. When you go there, it gives you a little, I don't know if you'd consider it a pop-up or a little article to read, and it tells you what are the different reports that you would go to validate the different section of the balance sheets. And for the banking and credit cards, it would be reconciliation reports. Reconciliation reports. Which report shows you the book or purchase value of your inventory item as well as your quantity on hand? And that would be the inventory valuation summary or inventory valuation detail. I'll go over all of these reports in the class I went over. A client would like to create a new custom management report. How would they be able to do this? Well, remember, you can't create them from scratch. So you'd actually use a copy of an existing template, and you would find that under management reports. Which 2 management reports will be by the client? I showed you that little table. Basic company financials and expanded company financials. So that's what I have for you for section 4. I have one more section to get out. I hope to get it in the next, 4 to 5 days. If there's anything I'm missing in the section, let me know. I actually didn't add any of the old questions that I had in the last video because I saw a lot of them. So they just kind of moved them around. So a lot of the questions they had in section 4 actually were moved to maybe section 2 and 3. So you might want to keep in mind, I know somebody once told me, I just had a big, large database of questions and answers. You might want to do that because in the future going forward, if you're watching these videos in 2023, they might just do that, moving around different sections. So just have all the questions and answer in one large database that you study from and refer to. All right. Thank you for watching, and I'll try to get the next section out in the next 4 or 5 days. Bye.